Hi guys, this is Prime speaking. I hope everyone is okay. And in today's session, we're going to be dealing with the cash generated from operations, which is the first note to our cash flow statement. So without further ado, let's get into it. So over here, we have the information of what we're required to do. Firstly, we're supposed to prepare the cash generated from operations note for the cash flow statement. That's all we'll be doing for this video, and then in the next video we're going to be doing note number 3 and note number 4 being the income tax paid and also the dividends paid. So now we have information A, which is information from the balance sheet on 28 February 2017. So this is a question from 2017, I believe. Now, given that we have this information, we also have information B, the share capital, information C, dividend, information D, which is the information from the income statement on the 28th of February 2017. So, right over here, we have our cash generated from operations being what? Being the note that we're supposed to prepare right about now. Okay? So, firstly, the first thing that you do on the cash generated from operations, you input your net profit before tax. Bear in mind that I put net profit before tax in bold to say that it is before tax, not after tax. Okay? Net profit before tax. So in this case, you're gonna go. In this case, it was given to us on the answer sheet. Then they say adjustment in respect of. I added this plus to actually remind you that you're going to add depreciation and also add the interest expense. Okay, so now this information will be given to you from the information from the income statement. Okay, now that is information D. Information from the income statement, we have a depreciation amount as 137,700 rands. Okay, so you go on our first note to say 137,700 rands, like that. All right, then we go on to find our interest expense. Our interest expense, it was 76,500 rands. So over here we're going to say 76,500 rands. Okay, then we're supposed to add all of these together to actually get the net profit before changes in working capital. Okay, so let's take out our calculators and add these things. So after pressing our calculators, we're gonna get the total as 214,200 rands, just like that, and that'll be the net profit before changes in working capital. Okay, so now we're gonna go on to the changes in working capital. Okay, so changes in working capital, we're gonna record the increase or decrease in inventory. We're gonna record the increase or decrease in trade and other receivables, and also trade and other payables. Okay, now that we cleared that one out, we're gonna say the increase or decrease in inventory. We're going to look at it from the information from the balance sheet. Okay, now we're gonna look for inventories. We have inventories here, trading stock. We're gonna look for the difference between 2016 and 2017, meaning at the beginning of the year and also at the end of the year. Okay, so now let me try to highlight this. So we're gonna look at these two amounts. Okay, the amounts for inventories. So now in 2016 we had 174,000 worth of inventories, and in 2017 we had 112,000 in inventories. So now, which one was bigger? Congratulations if you said the 2016 amount was bigger. So that means there was a decrease in inventories. Okay, so on our answer sheet we're going to say there's a decrease in inventories So we're gonna leave it like this. There's a decrease in inventories. Okay, so given that there's a decrease in inventories, I advise you, I urge you to show your workings in brackets to earn part marks, guys. All right, this is even one of the rules on page 2 of every accounting question paper. Show your workings in brackets, please. Okay, so now we're gonna take the amount from 2016 being 174 and subtract the amount from 2017 being 112. So we're gonna say 174 thousands, we're gonna subtract 112 thousands, like that, and close the bracket. Okay, ooh, I forgot 10 here. There it is. Then now we're supposed to write the total right over here. Okay, so now on the total, here's the trick about the income, the cash flow statement. So on the cash flow statement, what happens is you have to indicate whether this was an inflow of cash for the business or otherwise it was an outflow of cash. Okay, so in simple words, you're supposed to indicate if it was an income or an expense. Okay, so now we had stock at the beginning of the year, and at the end of the year we had less stock. So that only means that stock was sold out of the business. Okay, so if stock was sold, it means that we received cash for the stock sold, so it is an inflow of cash for the business. All right, so this amount over here, take out your calculators, let's see how much it'll be. So our amount will be 62,000 rands. Okay, so right over here we're going to input 62,000, like that. All right, now remember I said that this is an inflow of cash. Okay, so an easier way to do this is that you can take the amount on the balance information from the balance sheet. Okay, you can take at the beginning, you can subtract at the end. If you get a negative amount, then it is an outflow of cash. If you get a positive amount, then it is an inflow of cash. Okay, remember, balance at the beginning, you subtract the balance at the end. Okay, then if it's a negative, it's an outflow. You're going to put that amount with brackets to actually indicate that it is an outflow of cash. If it gives you a positive amount, you're just going to write it because it is an inflow of cash. That automatically indicates to us that this amount is an inflow. Okay, now we're gonna go on to the trade and other receivables. All right,